Happy Monday, folks. It's the start of a new week. It's going to be a good one. I'm feeling positive. I hope you are too. I hope you've identified what your frog is for the week. The one thing that if you get that done, the whole week will have been worth it. If not, figure that thing out now. But today's video is, it's all about the next one is always easier. And this is something to please always keep in mind in property, because you will face challenges. There will be hard times ahead, but you should endure, you should push through them, because the results in the long run are just extraordinary, and the next purchase you make is always easier than the last one. So if I may, I'll share with you a bit of a journey that I think most people go through in acquiring their first 5 properties and beyond, and what that sort of looks like, and paint a picture for the fact that because the next one is always easier, there's motivation to keep going in the early days, because it's a bit like cycling the bike uphill. When you're buying your first property, I think in 99% of cases it will be the hardest one you ever buy, because depending on your start point, you don't have much resources to work with. You know, let's say you need a 50 grand deposit to do something, and realistically you've been working for a couple of years, maybe you've managed to save up 5 or 10 grand, but you're still a long way short. How do you bridge that gap? Now you can ask, there's so many ways you can try to do it, but again, depending on people's circumstances, they're going to be easier or more difficult. So of course you could ask the bank of mum and dad who want to support you in your journey, but depending on their situation and their approach to this stuff, maybe you've then got a loan that needs to be repaid over a period of time, so you've kind of got to commit yourself to that and make it happen. Perhaps you need to take on a bit of institutional lending. And this is something to consider when you do your Equifax or Experian credit report, the credit matcher section, where it gives you a percentage likelihood of acceptance for loans on an unsecured basis or credit cards. I'm not advocating that you should do anything that you're not comfortable with, but when looking at that section, perhaps you can see that you have a high likelihood of acceptance for a £15,000 unsecured loan, and perhaps you have that same acceptance with a few lenders. And if you were quick and perhaps a little bit cheeky about it, maybe you could draw down with a couple of lenders kind of at the same time, so as that you can bridge that gap in terms of getting your deposit together, so that you can go and buy that first property. Perhaps there's interest-free credit cards for a period of time that you can get in and have a genuine plan for exiting without having to pay extraordinarily high interest, which you don't want to commit yourself doing for a long period of time. Maybe you're working to get promotions and things, get paid a bit extra so you can save more each year. Maybe you can keep your rent costs down. Really, you just have to do whatever it takes in order to pull together that first deposit. I myself entered into the Help to Buy schemes when I bought my first property, which meant I only had to buy a 40% share of my first property, and then I was paying a reduced rent on the remainder, and I had the opportunity to buy up the rest at any time. So there's so many different ways to do it, but I can assure you it will not be easy. But the thing is, get it done, because it will serve you in fantastic stead. Now, after you've managed to do your first, perhaps you've committed yourself to a repayment period to get that deposit all cleared down. So maybe for sort of 3 to 5 years afterwards, you're really focusing on just getting yourself back to a neutral position where you own that property, you don't owe mum and dad any money anymore, you don't owe, you've cleared off your unsecured loans. You've done what you needed to do, and whatever you've committed to doing, honour that, see it through. It will reflect well on your credit record, it will reflect well on you personally, and the last thing you want in this game is a black mark on your credit file for missed payments, because it can affect you for years to come. So get a plan together, make sure it's actionable and realistic, and then just commit yourself to it, and do that as early as possible, as young as possible, because all the science and all the modelling suggests the earlier you start with your wealth building, the better it's going to be from the point of view of compound effects through your life. So you've managed to get your first one, fantastic. So now it's all about just pushing to try and get that second deposit together, which realistically you're probably going to have to come up with yourself as well. So let's just fast forward to a point where you own 2. They've both been brutally difficult, but you found a way of getting it done. Good for you. You're very much in the game now, because in terms of the next one is always easier, and this snowball effect that I'm talking about, now consider you've got 2 properties, both producing rent. Maybe you're living in one, but you have roommates and lodgers, you know, so you're producing revenue still, or at least you don't have much outlay on your own home, and you've got rent coming in from the second. Well, put that into the savings account each month, because that's working for you to build up for the next deposit. And of course, although you can't go into any deal relying on capital growth, the reality is that if you look back in history, over any given 10-year period, the value of property has increased rather than decreased. Now, there's no guarantee that that will happen again into the future, but in this country, in the UK, there's supply and demand at work, where we've got a shortage of housing, we've got a growing population, we've got limited space, you know, so the long-term trend is upward in terms of property value, especially when you consider inflation year on year as well, and the fact that we've probably got a bit of an inflationary boom coming at some point, due to the billions of pounds that have been pumped into the economy through the last 2 financial crises that we've faced. So perhaps you've bought a place for 200 grand, you've sat on it for 5 years, you've paid everything back, and now it's worth, I don't know, I'm making the numbers up here, maybe it's worth 250, and maybe you've paid off 20 grand of the mortgage in that time. Well, you've got 7, and maybe you've got 2 properties that's happened to, right? Because you own 2. And you can go back to the bank and you can take a further advance against those 2, because you're still young enough that you can borrow money over a long period of time. They're happy to further advance to you. So you pull 140 grand combined out of those 2 properties. And you can go again, right? So maybe that buys 3 and 4. And now you've got 4 properties renting out. So let's say you've got 3 grand a month coming in, right? That's going into the side account every month. It's going in, it's going in, it's going in. How long does it take you to actually buy property number 5 in what I would call an organic manner, where you've actually used rental profits from your existing portfolio to fund the purchase of property number 5. Now you've got number 5 going, so your monthly rents increased again. The organic cycle can repeat itself where you're saving up for the next deposit, but give it another 5 years. Now, I emphasize again, you cannot rely on this happening, but if you're in the game, you deserve to benefit from market forces in terms of inflation and capital appreciation over time. So now you get another little rise in the value of things. You manage to pull some money from somewhere else, combine that with the money that you're saving each month, and there you are, you're funding number, what are we on now? Number 7, right? And you've got a snowball effect working for you. Perhaps you're still working in the background and you're saving still. Perhaps there's other institutional lending that you can tap into, like you used on your first purchase, because you've paid all that first batch down and you can go again. So look, it might well be the case that if you're maybe in your early 20s or wherever you are in your life, right? But those first 5 to 7 years, if you're starting from 0, it's gonna be hard. I just want to be honest with you. I'm not putting you off. I've done this myself. I've come through. It's not easy, but it is so worth it. And if you always keep in mind that the next one's always easier, keep that snowball effect in your head, that one day you're going to reach this point of organic growth where it is easier and it's growing. You know, it took you like 2 years to buy 1 and then you buy 3 in 1 year. That will happen for you if you persevere in this game long enough. So the next one is always easier. Find your way through those first difficult years where you're cycling the bicycle up the hill, because at some point it'll level off for you. You keep going and keep going long enough and you'll start to come back down the other side, and you'll freewheel a little bit for a while, and that will be your just reward for the sacrifices that you've made. So when you're pushing through, always remember, the next one is always easier. Happy Monday, folks. The sun's shining for you. I'm behind you. I hope you're feeling good. If you've got any thoughts on this or personal experiences from your own journey that you'd like to share, I'd love to hear them. I'm sure others in the community that are trying to make things happen would love to hear from them as well, because the more key learnings we can utilize and put into our own journey to accelerate things and make it easier and find shortcuts, the better for everyone. Best of luck. Speak to you soon. Bye-bye.